Hi, welcome to Beat the Market. I just thought I'd update the what's going on in gold since it's the beginning of the year. What's the date today? It's January 12th. Well, I guess it's almost halfway through January. But anyways, a lot of people think that gold is bottoming. And when you look at it, you kind of do see a little bit of a bottom. You know, initially made a 1280 low at the end of July, the last week of June actually. And it rose to meet approximately the trend line, and then it's been making the head and shoulders pattern that I've been making a big deal about, as you can see right here. This is an 18-month chart. So, at any rate, so it's come back down, kind of collapsed after, it's found some support where the previous low was at the end of June. So it's rallying now. A lot of gold bugs think that here it is, the bottom's in, China's buying. How much physical gold? They're cleaning everybody out. You know what? That's fairly significant, but it's significant in the long term, not really significant right now. So if you're a small investor and you don't have a lot of gold, yeah, you still sell your physical gold because this could drop, in a worst case scenario below, $930. And if it does drop below then, there, you're you could be in a range bound market where it could go between $700 and $1,000, and you got your gold producers hedging up high. So I just there's still a lot of danger in this market to the downside, and I for one do not believe that the gold market has bottomed, even though you have a small double bottom, here, and it's sort of fighting this head and shoulders pattern we got here over the last 6 months. So you have, and basically it shows you got a downtrend, and you got horizontal support. So which is going to be stronger, the downtrend resistance or the horizontal support at $1,200? I for one think that, yeah, you know what I think. Anyways, the big thing here is what's going to happen is you're probably going to get a nice little rally past the 50 MA, suck everyone in at the beginning of the year, all the gold bucks saying it's bottom, it's bottom, it's bottom, and then you hit this trend right here, and boom, that's where the smart money is going to sell it. And why do you hit it? Why do you sell it right there? Well, because it's really easy. If it breaks the trend, pushes through that, closes through there, a couple of days, you reverse your position pretty close. Very, it's not much of a loss, at that place. Instead of holding on, waiting, or buying a falling knife, right? Just like if you were gonna buy the market, you buy it around 1200, and you just sort of wait, but it's fool's money, really, if you're not buying and selling the two extremes to even play this market yet. You wait for it to break, because you got a nice little triangle, and this is a wedge right here. I think it's bearish. How can you not think it's bearish, right? You got a big, strong downtrend right here, and you know what? Just an extreme buying opportunity here every time low. So this is a market you got to be aware of. Right now, it's in no man's land, so I wouldn't be doing anything. I'd be shorting it, up around where's the key level? Well, we'll take a shorter time frame chart, but for right now, let's just sort of bring this down here. It likes to test the neckline I've been talking about. So you can put it anywhere in here, really. Oops, so too many. So, and notice as you get closer to mid-February, you're gonna hit this same area right here. So the little rally comes up, looks like it breaks through 1270, hits 1280, hits this line here. So you not only do you have this area of resistance, you also have the neckline that it's probably not going to break through either. And more indications that you do not want to be is MACD still negative. And generally it'll rise to 0 where it'll turn around. So that's a good place to short it too. Which should excuse me, I'm tired. Which should coincide with this area right here. Pretty easy visual charting, you know, nothing. No rocket science about it. Anyways, okay, you want to go to shorter frame here. Let's get to 0, 6 months. So we got our head and shoulders. Here we need to go out a little farther than that. Here. Got a little head and shoulders coming there. Nice little thing. So just to bring it into closer. You can put it right there. Even sandwich it up right there if you want. That's 1280. That's what I was thinking too. 1280 is a significant area of resistance anyways. So we look at that. You probably won't even hit it because unless it pops up to that one day, you're probably not going to hit it. But anyways, gold's positive for the next, week or two, or maybe even 3. And even if it breaks through that for a couple days, you just got to watch out. It could be a head fake, right? So yeah, that's my little talk on gold right now, and I would not be long. Well, unless you're a trader, you'd be long for a couple days. But yeah, it should run another 20 or 30 bucks, and if it does break through that mark, then you could see up to here. You might, maybe 1400, 1430. But I, for one, do not think gold's going to make it through that mark, because I think Janet Yellen's going to surprise us in February. 10 billion, not much to taper with. And so she's going to cut back a little more. Some reasons why she's going to cut back a little more. Well, number one, the jobs revisions were so horrible. But that should get revised upwards. And, that's just what I say. So, have a good one. Have a good night. Happy trading. It's a great week next week. See y'all.